What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is June 29th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content. I will continue to make it for you. Really appreciate everyone that watches these videos and supports the channel. Today we're going to talk about the price action of the indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll go through some options order flow as well. Before we jump into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it today. So today's actually my last day in the office here. So I'm actually heading on vacation. I'm going to be out for the next 3 trading days. This is my first time away from the markets in quite a while. Definitely going to be pretty crazy. Let's see what we had here. We'll flip over to our S&P 500. And you can see for box scores, let me take off this time and sales, we were up 0.05% on the SPY ETF. We were up 0.36% on the NASDAQ QQQ. We were down 0.48% on the IWM small caps. And we were up 0.02% on the Dow Jones. So I talked about this a little bit earlier, but yeah, we've had a really nice run in the indices, and we tagged this 42.92 pivot level for the S&P 500. So we have made it to our destination, team. Who would have thunk it that we had these 4 awful days in a row right here, and then we would just rip right back with another 7 days of really nice price action. So a really nice rally here. At this point, though, in terms of risk to reward, I'm a trend trader, and for me, it's like catching the trend. I don't really care about getting the very beginning of it or the very end of it. This is actually starting to feel like we're towards the latter stages, very mature stages of this next leg higher. So I did take off a little bit of risk today. That being said, I'm not one of those people. It's like, okay, and that means now I go short. No way. I definitely still think the path of least resistance is to the upside. So I'm still long. But yeah, I thought this was a good spot to take a couple of trades off. Yeah, and you can see we're kind of extended from this 20-day. But heading into a holiday weekend, a lot of times people are, like me, I'm going on vacation, usually on all these institutional trading desks. You have a lot of the portfolio managers that are going on vacation. So a lot of times there's not really big decisions being made, in terms of buying or selling. So a lot of times you do just get this choppy market that tends to resolve to the upside. So we'll see what happens. NASDAQ, you can see here, really just pumping. Really nice trend for the NASDAQ. And we're nearing this R2 pivot level here at 14,632. And at that point, I would also say mission accomplished for the NASDAQ for the most part. Yeah, NASDAQ was our outperformer today. We have this theme going on where I don't really know if it's directly related to this, but there's this Delta variant of the coronavirus that's hitting some of these emerging market nations. So yeah, we're getting a move into a lot of these technology companies and out of anything cyclical. You can see the Russell was down 0.47% today. Russell is acting suspect. So you can see, yeah, every time we hit one of these swing highs, the Russell just tends to fail. It's been stuck in a range for quite a while. We are still in that range. And then Dow Jones, not really much has changed today. We closed up 0.06%, but you can see we failed when we auctioned above this monthly point of control here. So yeah, not really all that much going on in the Dow Jones. Let's flip over to market breadth. And you can see that the breadth was actually negative today in 3 out of the 4 indices. So this to me is another indication of, hey, it's becoming a more challenging environment. Unless you're really just hammering the Qs and tech, which for the most part is what I do. If you're in any of these other areas of the market, if you put a trade on, just for a good rule of thumb, if you enter a trade on any company within the S&P 500, you got a 45% chance of winning today. It's like a very simple way of looking at things. But yeah, you can see the breadth. Yeah, breadth in the small caps was very poor at 31%. Finviz Heat Map, you're going to see, the same exact thing here. We had Apple and Microsoft, which were very strong today. And then you can see the semiconductors were pretty strong, some of these software companies. But other than that, it was a much more mixed bag. So you can see utilities really getting crushed. Energy also was negative for the day. And you can see consumer defensives as well. Let's jump over real quick to Apple and Microsoft. Let's just see how those charts are looking. Apple definitely looked a bit interesting. Let's check it out. Yeah, you can see Apple. And it looks like we are trading pretty much right at that prior swing high where it failed last time. But yeah, Apple definitely does look like, hey, maybe this thing could approach new all-time highs. We'll have to see. Yeah, the weekly definitely looks interesting here as well. Let's check out Microsoft. Microsoft, yeah, you can see this one has been a really nice performer throughout 2021. And yeah, this is definitely getting, a bit more mature in its rally. So maybe here, like this 273 level makes sense in terms of a target. Let's jump over here. We'll go to our sectors. And so in terms of sectors, we have solar energy leading the market and then the ARK funds. So a lot of these high growth, secular growth areas of the market. And then at the bottom of our list, we have European financials, regional banks, and the gold miners. Let's see. So our best performer for today, I see that video games and esports ETF was up 1.15%. And then our worst performer, we had utilities down 1.62%. And then flipping over to style factors, you can see we had the growth style factor was our best for the day, up 0.34%. And then we had, worst for the day was cyclicals, which were down 0.73%. So we still remain in this tale of two tapes. And the way that I see it is like when these rotations happen, I think the real opportunity is like at the beginning of the rotation. Certainly now there's still growth stocks that are working. But once the rubber band really gets stretched very far, that's where it becomes like, you could get whipsawed either way. So yeah, right now we're seeing like the pendulum is really shifting over to these growth stocks. So let's take a look at some of my trades for today. And today my goal was to take some exposure down and take things down in particular that were not working. So I put some Expedia October 20th 170 calls on. I'd paid $15.30 for these, took these off for $9.95. And I put a note here, travel stocks got hit hard the day after I entered this position. Would rather reallocate this risk than hope that this comes back. So let's take a look at Expedia and you'll see what I mean here. So I put this trade on, right as this one was clearing these key moving averages. And then the following day, this one just really got hammered. And really all of these travel stocks are having a rough go right now. So if you see what I mean, like Hilton, HLT, getting hammered, Booking, getting hammered. What else do we have? Yeah, Marriott, Airbnb, which is one I have on. This one had been avoiding it for quite a while and was kind of bucking the trend. Yeah, this one kind of fell with a lot of those other travel-related companies. And I'm looking and it's like, is it all related to this highly contagious Delta variant ripping through emerging markets? We'll have to see what this actually amounts to. But yeah, at this point, a lot of these travel names are getting pretty oversold. But yeah, I didn't want to, at least for Expedia, I was like, I want to take down some risks because I feel like we're getting a little bit more mature in this rally. So of these positions, I'm going to take down this one that's not really working. In terms of some stock trades, the only trade that I tried on the long side was Sophie today. And I ended up stopping out of this position as well. So Sophie, This one had really strong volume in the pre-market. And in the pre-market, this thing was up 6%, gapping higher, and it was on like 9 relative volume. So I was like, maybe there's something to this. I've seen a lot of options order flow. So I entered a position on the open, and this one really just slid throughout the session. So I stopped out of this one, and I'm glad that I did because it turned negative. But yeah, for me, when that's sort of like what I start to see is happening, where like, oh, I'm putting these trades on and I'm getting stopped out the next day or even the same day, that's like another indication for me that, hey, you know, the environment's starting to get a little bit more challenging. So I also closed out my upstart, and this one really, like, as I head into my time off, this one, it's been basing for a couple weeks now. I still have faith in this company long term. But yeah, if you think about the last 7 days we've had in the NASDAQ chart is like blasting off. This one did not even participate. So the last thing that I want to have on my books is something that didn't participate in the upside, but I still have that risk on, where maybe if things do go south, it could participate on the downside. So yeah, I took this one off as well. And then I also took off Formula One. This was a name, close this one out for a small winner here. But this was a name that I recently added, and it had kind of a weak close. So this one, I added it as a wick play, you know, right in, or I believe I added it on this candle right here. Yeah, so I added it pretty much right on the open. And this one's done okay, but you can see it's pretty extended. And this one, you know, in terms of taking in some risk, I was like, I'll pull this one off, because this one, it's kind of like a newer swing, and I'll just take that chip off the table. Let's real quick, we'll go through our options order flow, and then we'll break here. All right, so let's check it out. What do we have here? Let's go to our Tradescape. So you can see the Qs are attracting a lot of call buyers. So you can see we had 26 million, Microsoft 20.51 million just for that single company. Coinbase, this was an interesting one. So the cryptocurrencies, which I'm heavily concentrated in, you know, really started to perform over the last couple days. And you can see Coinbase had a nice bullish to bearish trend reversal setup here. So yeah, coin closed off the highs here. So this actually didn't really confirm the setup. This is the brand new 50-day simple moving average. But yeah, you can see this one. It looks like we could start to see some traction. And let's pull these cryptos up actually. So yeah, I'm very bullish long term on these cryptos. My largest position is Ethereum. Second largest position is MicroStrategy. So yeah, they're starting to shape up. And I think this was good that we were able to clear this pivot. And as of now on Bitcoin, it's starting to look like we're putting in a really nice base. And then in Ethereum as well, we still have some work to do. But what's awesome is we just cleared our first technical hurdle, which is getting over the 20-day simple moving average. I don't know why this defaulted to EMAs. Some people use the exponential moving averages. I use the SMAs. It's really just personal preference. Yeah, you can see as of right now, we're trading above the 20-day by a smidge. We'll see if we close there. And then with Bitcoin as well, we are trading above the 20-day. So I do think there's a lot of players out there that below the 20-day, they literally can't get involved. But above the 20-day, and as we start clearing the 50-day, the 200-day, I think there could be a flood of capital that's coming into this space. So yeah, in terms of like individual names that are just like not really working, I'm like, get those out. I need to make room for the real positions here. So yeah, we'll see. And then let's take a look. Maybe we can find one more on our order flow. Let's see. And then KWeb. This is very interesting. So KWeb, $42.48 million on these calls. They're for August, the 74 strike. And then we have August, the 84 strike. We did have a put order come in at the 66 strike, also for August. And that is a smaller order than these two. But let's check it out. K-Web has been down in the dumps for so long. And wow, this actually does look like it might want to make the turn. K-Web, check out, it's never been able to get back above that 50-day for as long as it's been in this horrible downtrend. Wow, look at this volume too. This could be just month-end stuff. But I do have exposure to this group, and this is a group I think you got to watch for, as it plays out. I have Futu on right now as one of my largest core positions in my portfolio. And then I also have on JD via some calls. So Futu is like my front runner. JD is like my laggard. Maybe, all these companies that have been beaten up start to take shape. And this, I would say this is one of like the leaders of the laggards that have this like weird, horrible pattern here. Yeah, that about does it for this market recap video. I will not be doing a market recap video for the next 3 trading days. But yeah, I really appreciate everyone that does watch them. And I will see you all next week. Happy 4th of July, everyone.